Ben, there was a legendary bumper sticker in Silicon Valley. It said, "Please God, just one more bubble." Have those prayers been answered?
I think we're headed there, but I don't think we're there yet. I mean, this was the week for bubbles. It's, I think, in every column in the magazine this week has talked about it in some way. We have Jack Howe in Streetwise, who's not here, but talking about the relaunch of a meme ETF, and people saying that's the sign of a bubble. People were looking at the OpenAI deal saying that's the sign of a bubble. But I'm trying to think back to the internet bubble, and what really stuck out back then was just the way that it was not just the stocks and like pets.com, people always talk about that. It was companies doing really wacky things. It was like Montana Power deciding that, you know what, I don't need to be a utility company anymore. I'm going to do fiber optic cables and be an internet stock, and then going bankrupt. And you know, that's the kind of thing that tells you that you have gone from just the inflating part of the bubble to like, I'm going to start to worry part of the bubble. It's when we see these ridiculous deals like AOL Time Warner, where you take two companies that really have no point being together and combining them. And so we're heading there, but I don't think we're there quite yet.
Jack also mentions Naked Twister, which I think is a first in Barron's 104-year history. So the one thing that I think could be bubble-icious is this circular financing, right, where NVIDIA puts money into OpenAI, and OpenAI takes that money and buys chips.
Yeah, I mean, this is the kind of thing that we did see during the dot-com bubble, and it's something you don't want to see. I mean, it really comes down to, is this revenue going to materialize? You have OpenAI that wants to spend $1 trillion to build out everything, and that's a big ask. So you want to see if that starts to falter, then you have to start worrying.
Yeah, it's going to take a lot. AIs have to be very profitable for a lot of companies to justify that spend. Let's go to actionable ideas. Jacob, what do you have for us?
Brinker International, ticker is EAT, EAT, and it's the parent company of Chili's. That's most of the business. They've gotten Chili's right over the last few years. You might think, how is Chili's any different than Applebee's? Actually, they bring you food really quickly because of the investments that they've made. They've done a lot of marketing. They've gotten people into the restaurants. They're growing faster than most of the restaurant business. They're growing earnings faster than most, and they're trading at 11 times earnings, but they should be trading more like Darden restaurants at 17.
And real quick, Zach Cass, who came on the show to talk about AI, likes the Brinker stock. So there is an AI connection here. Megan, what's your pick?
Well, it is October, so I have to talk about spooky season. When we talk about spooky season, we talk about TJX, TJ Maxx, Home Goods, Marshalls. You go into these stores and it's a wonderland of Halloween, and then Christmas shows up. This is a good stock for the season, but it's a good stock for investors as well. Very positive ratings here.
All righty. Thanks, Megan. Thanks, Jacob. Interesting, Ben. To read more, check out this week's edition all about bubbles at barrons.com. Don't forget to follow us on X. That's at Barrons Online for the latest Barrons updates.